Hi traders, welcome back to the channel. Today I'm going to be going through the commitment of trader reports. We're going to have a look at the extreme positioning by hedge funds on two currencies that could lead to a potential reversal. So if you're in the live stream yesterday, you would have already seen this breakdown, but I'm going to go in and show you a little bit of an update to that. We've had some more price action now, which is suggesting that this market might start playing out the way we have anticipated. I'm also going to show you a breakdown of why we should be looking at this, the conditions around it, and a potential strategy to use. So stick around. First of all, why am I interested in this particular market? It's all to do with hedge fund positioning. Okay, now we as traders, especially as retail traders, we're not privy to as much information as institutions are. We haven't gone through the university courses, the degrees, the extra work that's needed to then go and work for a big hedge fund or a big bank. We're not privy to that kind of option. A lot of the times people that are retail traders are those that have come into the industry after learning about it online, want to make some extra capital, and they've come into the market. So we need as many breadcrumbs as possible. For me, the commitment of traders is a breadcrumb. It helps me build a picture of what's going on in the market. So let's take a look at it. This is the commitment of trader report here, or one of. There are many that you can find. This is a free version that bar chart also present to us. What I'm going to go to here, or what you can see the options are here, is I've got the non-commercials. They are large speculators. Those are essentially traders that are in the market to make money. Okay, they are speculating on price. We have the summary report and the detailed report. I'm going to go over to the detailed report, and there are two things that I want to point out to us. First thing is, look at the positioning on the Japanese yen. You can see that March 4th, that was last week's data, has come out, and we saw that hedge funds increased their net position, so that is the difference between the long and short contracts, to 133,651 contracts long. Okay, so that is a significant bullish statement. The reason being as well, over the past 52 weeks, these are the highest levels they have been. Now, when I open these up, you will also see that they are the highest levels in history. Okay, think about that. They've just reached their highest levels in history. We can see that here. I've just took off a couple of parameters there. This is the hedge funds. This is the buying from the hedge funds. If I zoom out and we go back all the way since the commitment of trader reports were coming out in 1985, they are at the highest levels in history. Now, there's a lot of things around that. There's a lot more money in the markets these days. There's a lot more speculators in the markets these days. But at the same time, that is a significant piece that we need to break down. Now, I like to use the commitment of trader reports in two ways. One, for trends and opportunities, but two, reversal opportunities. It can tell us when a trend is coming to an end. One way we do that is by looking at extremes within the markets. When we hit a extreme that has not been seen in a long time, we can often see price reverse. Okay, we saw it most recently where we came up to this extreme here, late 2024. When we look left, we hadn't hit these levels since 2016. So that's a significant extreme in the market. What happened to the Japanese yen? It weakened. Okay, so what we've got here is a Japanese yen futures chart. Okay, so a futures chart is the opposite of, well, the Japanese yen anyway is the opposite to dollar yen. So when I'm talking about this and I'm saying Japanese yen long, that's dollar yen downside. Okay, when I'm talking about Japanese yen falling, that's dollar yen upside. Okay, you just got to flip that and inverse that, because dollar yen is a derivative of the futures market. And you can see that we've been pressing higher here. Contracts have been going long. That is telling us that hedge funds think that the Japanese yen is going to be a stronger currency. The market is pushing higher. They're buying into it. We want to buy into it. However, they're doing it at such a level now that they may have to try and pull back some of these contracts, okay? Because what they need to do essentially is take profit on the move. And once they take profit on the move, Price will likely fall. That's what brings us that reversal setup. In the future, it may continue though because of certain parameters. So what I'm looking at here is potentially that the Japanese yen is reaching an extreme, which may mean that yen futures could start pushing lower, which in turn means dollar yen upside. Okay, let's go to the other currency, New Zealand dollar, minus 55,765 contracts on the downside. That is a 52-week low. If we open this up, this is the shortest that they hedge funds have been in history as well. Okay, now we've talked about this quite a lot recently, especially with New Zealand dollar, because we actually saw them get to an extreme here back on June of 2025, right? Sorry, not June, January 2025. I was reading that in American. January 2025, where we came into that 2022 low, okay, and I said that this could be a good place for a bit of a reversal, a bit of profit taking. That's exactly what happened. The market started to push higher. They are getting short again at this area here, okay? Now, they're probably doing that for a number of reasons. RBNZ are cutting interest rates. You've also got the situation in China, and if China doesn't really speed up in terms of economic activity, then, you know, New Zealand, a heavy trading partner, a reliable trading partner, or a reliant trading partner of China, is not doing too well. So they need that to ramp up again for people to start buying New Zealand dollar. Global risk as well. Big factor, risk currencies get sold off. So that's what we're seeing. But they've reached yet an extreme, you know, the lowest levels in history. If I open this up, you can see that there. And also very clearly just surpassing those recent lows. So what could that mean? It could mean that we're actually going to see a little bit more New Zealand dollar upside in the very near term at least. Let's go over to the strength and weakness table then, because what does this also mean? Well, actually, we've got the New Zealand dollar gaining strength last week. It went from -4 to -1, so there's some positivity there on the New Zealand dollar. Japanese yen is +7, so it's the strongest currency. But in that reversal zone, let me show you one other thing as well. When we go over to the strength meter here and we have a little look at it from sort of a visual point of view, what tends to happen is when a currency gets super strong and it hits into these +7 areas, it can lose a little bit of that, right? Profit taking, X, Y, and Z, maybe some shift in sentiment happens at that point. But essentially we start to see it come down a little bit. It happened over here, happened over here, happened over here as well. On the opposite side, you've got New Zealand dollar, which is ramping it, which is a blue line here. So there could be a little bit more downside to have here for the Japanese yen, which is this white line on the chart. So let's go take a look then at the chart that I'm interested in, because if we're looking at New Zealand dollar, we're looking at Japanese yen being at extremes, it makes sense to go and take a look at the New Zealand Japanese yen chart. Now, yesterday we spoke about in the live stream, if you were there, we spoke about the fact that the market was kind of forming this little bit of a double bottom here. And one thing I was looking at was for price to at least break out of these 4-hour highs. We've got that now. Price has broken out. I was expecting some kind of pullback, but at the moment we're kind of just breaking into new highs again. We've got one of those really nice ascending triangle patterns where the market forms higher lows, and then we've got that kind of base. Markets broke out of that now. So it looks like we're starting to see that reversal coming in, even if it is in the short term. If we look at that daily chart and say to ourselves, okay, if we do start to see price pushing to the upside from this double bottom, where's the next likely area? Well, you've got the neckline. So you've got two necklines. You've got the closing necklines just up at 85.22, and then you've got the sort of candle wick neckline up at around 85.62. So those two areas here could be targets for buyers, you know, in the short term, pushing into that area. If we break that, then maybe we're going to have a bit of a deeper retracement. Maybe if we break something like this counter trend trend line that forms through, if we breach through that, that could signal that maybe we're going to get a deeper correction, and we can start looking at other areas, maybe back up towards this kind of 87 area would be a really nice area to go and target, especially from a weekly standpoint. So breaking it down into the method, why do we want to be in this market? Well, we've seen that there are two extremes on the commitment of trader reports. Okay, that gives us the why. The conditions around it, we're starting to see reversal patterns set up. We've got this potential double bottom forming within the market. Can it go and target that neckline? Can it go target this trend line resistance? What strategy now can we apply? Well, you can use any strategy really, because we're looking at a potential breakout in that trend. I'm looking at breakouts on this hourly chart. So that candle there would be a nice breakout opportunity to start looking for opportunities as well. Ultimately though, I want to try and increase the risk reward or the reward to risk on this. So if we can push back down, so let me grab a pencil. If we can push back down into this area that we broke out, find support here again, look for those lower time frame changes of trend. Maybe we can look for an opportunity then to see price come up into first target 1 and then second target 2 up in and around that area for me. Okay, so keep an eye on New Zealand yen, something that I'm very, very interested in on a short-term pullback opportunity in line with those extremes that we're seeing on the commitment of trader reports. Please remember, this is not trading advice. Always do your own research and due diligence when you enter a position, and remember, trading on margin is high risk. Thanks for watching. If you enjoyed it, like and subscribe, and I'll speak to you soon.